Let's bring in Eric Falcon, Director of Analysis at Predata. Eric, welcome back. Second time you guys have been in our program, maybe third. And I just want to reintroduce you to our audience to know what you guys do. What you're doing is looking at information in every way you can basically get it from the internet and more, and trying to kind of predict the future a little bit. So tell us what's going to happen here.
Yeah, that's exactly right. At Predata, we look at what we like to call the other side of the internet. So many capabilities out there are looking at what people are posting, what people are saying, what the sentiment is out there on social media. And at Predata, we look at that other piece. It's not what people are putting out, it's what they're paying attention to. What are the subjects online that are getting the most attention? And we use machine learning at Predata to find patterns in that traffic that help us get ahead of these events and trends that are moving the markets.
So let me tell you, let me tell the viewers rather, I'm looking at your data from last week because we were talking about doing this hit, and right before the weekend, you guys signaled through your data that searches and information about Italian coronavirus risk and outside China was starting to really build up. Looks like you guys nailed it ahead of the weekend.
Yeah, that's exactly right. We were seeing heading into the end of last week that global attention to coronavirus was increasingly being driven by Italian language traffic. And this is ahead of the reports that came out this morning of the massive outbreak in cases there, even some fatalities. And this, we saw alongside other broad trends of macro risk indicators in and around and Europe. And this is the main trend that we're tracking at Predata this week.
Okay. How do you know what signs of turning do you look for? Is there any sign that curiosity about this situation, panic about it, is it building? Is it slowing? Is it plateauing? Give me some macro here.
Yeah, it's interesting that you really see or saw a peak at the end of January, beginning of February, when really it was first around the main headlines all around the world. And there was this growing recognition that coronavirus was going to begin spiraling out of control. But the odd thing was that very quickly after that, it began disappearing from the public consciousness. Markets were moving on to pay attention to other things. So you see this big swing back today. It's a lot of how we understand the reaction to markets today, that when you see this sudden wave of negative headlines, suddenly the reaction becomes quite strong. So we were seeing some of those undercurrents despite the overall global downward trend in engagement with coronavirus shifting towards Italian language attention, Japanese as well, Spanish as well. So again, some of that focus in the southern Eurozone, but that's standing in contrast to that broader downward trend since the peak of the height of the outbreak at the end of January.
Stocks had a few little rocky days in mid-January, but then powered back. It's like today, they finally gave up a little bit. How does it line up with your data timing? I mean, not to stretch you too far into, extrapolating the data into the market, but I mean, what does it line up with? Have bonds been way ahead of this as they've been moving for like 2 months, or did the numbers and the excitement really peak here recently to go more with stocks? How do we think about this?
Yeah, I think the way we see it is that these concerns around coronavirus are playing on broader macroeconomic themes in the countries and markets that are being affected. So look at a country like Greece. Our customers this morning received an alert that elevated attention to the banking sector preceded the sell-off in markets in Athens this morning, led by bank stocks. This, for us, fits into a narrative we've been seeing over the past couple of weeks around positive economic news coming out of Greece, with their 10-year yields getting below 1% for the first time in more than a decade, but also some of our risk indicators for economic disturbances and staunch public opposition to efforts for pension reforms led by the government to continue to meet the European Commission fiscal standards. So these fears around coronavirus fit into those broader narratives, and that's why we think you see these types of broader swings.
If we then understand which geographical points are driving the most surprise and market reaction, I'm guessing you guys can see from your data how some of that is building up in those areas. Is there something that's obviously next after Korea, after Japan? It went from Korea was like the first post-China, then it moved over the weekend to Italy, then there's rumors of Iran as well. I mean, can you pinpoint what right now is generating the most traffic?
Yeah, I think we're continuing to see that upward trend in all three of those languages, those audiences I was discussing earlier, the Spanish, the Italian, the Japanese. I think economically, Greece is definitely something we're continuing to look at as that next horizon, right? That intense focus on the banking sector, even before the news really broke today around the just how what the extent of the presence of coronavirus was in Southern Europe. And of course, given the proximity of all those places in the region, the very deep transit and economic links there, of course, a high risk of spread. So Greece is going to be the place that we're really looking at over the next couple of days and weeks.
As a story, it has the potential to travel just about as fast as the virus itself. It's literally a viral story, Eric, and it's hard to know from a market standpoint what that impact is going to be without much precedent. But from your perspective, can you make any conclusions yet about what kind of chatter is lining up next to the actual effect? Is there a clear answer as to whether or not there's a lot of talk and less economic impact, or is there a bunch of economic impact coming when you see this degree of concern building up in your metrics?
I think it's two things. The first is, as far as the engagement with the virus is concerned, this one's big. We looked historically at engagement with coronaviruses in general. Of course, there have been other coronavirus outbreaks in history, and attention to this Wuhan coronavirus, the COVID-19, is higher than any of the previous outbreaks we've seen in the last 10 years.
You guys able to get data for the old stuff?
Middle East respiratory syndrome or others. Sorry?
You guys have data for the old stuff? The SARS or MERS?
Yeah, our data, we bring it back all the way to the beginning of 2010, so we can compare to those outbreaks in 2014, 2012, and even non-coronavirus outbreaks compared to the Ebola outbreak in West Africa, for example. This far outweighs that in terms of concern and attention to pandemics. So the impact of this outbreak of this virus is unprecedented. As for how it is, the scale of the impact on the markets, again, come back to that idea that where it's intersecting with broader themes, that's where you're going to see the most impact. So we were looking at Japan this morning in the alerts that we sent out to our customers, and noted that, with last week, GDP figures for Q4 2019 coming in below sort of the contraction, much steeper than what the markets were expecting. The focus on Japan's economy is driven by themes such as Abenomics, Japan's lost decade. And these are themes we've been talking about for months and years even. They're still coming to the fore, amplified by concerns around coronavirus. So wherever the direct economic impact of the virus is intersecting with these broader macro trends, that's where we're seeing the most impact.
There's a lot of stuff going on, right? I like that. That's a good perspective here for us on the end. Before I let you go, Eric, to bring it back full circle, the concern that I see is that these new locations and clusters might have that same type of a hockey stick pattern that China did early on. I'm curious what the pattern looks like in the data. After you see those spikes, does it hold, or is it, hey, there's something going on here, and then the numbers drop? Do these interest levels hold, or do they move like the hockey stick? What's kind of the pattern? Have you able to see that so far? Because it looks like on the first chart, it does keep climbing.
Yeah, it certainly does, and it continues as the news escalates and the reported cases escalate and escalate. You do see that level of attention continue to climb. This is, again, very similar to what we saw at the end of January, early February, when this really first hit global headlines at a massive scale. The interesting thing, and this is often the case, is that people at some point begin to lose interest, even when it remains an issue, remains a very clear threat, right? The virus has not been eradicated in China yet. Attention in Chinese audiences, attention to various aspects of the Chinese economy that have been affected by coronavirus have been on the decline. Since the beginning of the month. So that's why you see the market get surprised again when new news comes out, because they've gone on and paid attention to other things. But to your original question, you do see that hockey stick, and when you get a sense of when that plateaus, that gives you that indication that it's really reached that peak saturation. Really
interesting detail then, because as that activity drops, it kind of opens up the door for more surprise on headlines. Maybe a little explanation for what we see today. I like that. Eric, really good stuff. You guys have really unique data. Appreciate you bringing it to us. Thanks a lot.
Thanks, Oliver.
Appreciate it. Eric Falcon, Director of Analysis at Predata. Pretty cool stuff, trying to get insight on what's to come.